Alright, so how is everyone doing? In this video, I thought I will talk more and expand more about one topic, which is a pretty common one. I see traders use it incorrectly what comes to spotting key areas of where price is most likely going to reach when we have a clear trend, when price is moving towards a bigger, higher time frame drawing liquidity, a bigger level, or let's say it's seeking for imbalance. When we are trading in that direction, I think it's not new, it's not something that you don't already know. We are looking for some model fractals inside of that movement. What comes to the lower time frames, what comes to the 15-minute time frame, execution time frames, and so on. One thing that traders don't really know how to do is how to trade a buy side of the curve of a sell model, and vice versa, how to trade a sell side of the curve of a market maker buy model. So here this time I thought I will give you some rules, some examples, and how to read price correctly. So now let's move everything to this side here. Open a blank space. All right, so now let's talk about a bearish scenario. Let's say this is where we have a weekly time frame, and it can be a monthly time frame, a daily time frame. It doesn't really matter. But for example purposes, let's say that this is a weekly time frame, double bottom that we are targeting as our main draw liquidity. So now where we are, let's say we are in this bearish trend right here. We are in this bearish delivery. Price is moving towards this main liquidity pool that we are targeting right here, which again, as mentioned, let's say is a weekly draw on liquidity. Notice that price been inside of this one-sided run, has been fully respecting bearish PD raise. Let's say it rejected an order block right here. We got a fair value gap rejection here, another fair value gap rejection right here. So in other words, price been on this clearer higher time frame, bearish order flow, drawing towards the main level that you highlighted for yourself, that's acting as, again, the main magnet area from the higher time frame point of view. So when you have that, whole trading becomes a lot easier because firstly, you have a direction, you know where the main impulsive moves happen. But now one thing that I want to talk about is that even though we are moving towards this higher time frame drawn liquidity right here, it doesn't mean that you are not going to take any trades on these pullbacks right here. Because if we would zoom in, let's say on this pullback right here, that came, let's say, into a bearish weekly fair value gap, if we would take this pullback and let's say we would zoom in on this pullback on a 4-hour time frame, this is where very easily we would have a complete market maker sell model right here. This low right here being the original consolidation, price winding towards this weekly bearish fair value gap, giving clear bullish order flow. It climbs into that bearish weekly fair value gap and then shifts into sell side of the curve of this sell model. So this triangle right here, this pullback on, let's say, 4-hour time frame right here is a full market maker sell model, and this low right here becomes original consolidation. So in a way, we are moving towards the main higher time frame drawn liquidity. We are focusing on short opportunities and stuff like that, but again, it doesn't mean that we are not going to take any trades against this move. And the only times when we are actually going to look for these moves is when price, while moving lower, leaves some clear PDAs. The whole move is somewhat overextended already. And when we look left, it already ran quite a lot of sell side liquidity pulls, let's say on the daily time frame or even 4-hour, because then we have a bigger draw liquidity. Obviously on lower time frames, daily time frame, we will have more smaller sell side liquidity levels that price will take out on the way towards the main draw liquidity, towards the main magnet area. So what that does, it usually causes at least a reaction to happen. So this is when obviously we look inside of this lead here to see if we have any clear PD raise. And if we have that, and we see that lower time frames starts consolidating, and we see price starts switching into bullish order flow right here on the 4-hour, 1-hour, etc. This is again when we look higher. If we have daily, weekly time frame clear bearish PD raise, this becomes our key area right here that price will need to reach into to be able to continue dropping lower towards the main drawn liquidity right here. And for that to happen, obviously we will need to see some bullish action to take place towards that So this is where our long scalp opportunities are born. Why scalp opportunities? Simply because we are pushing against the wind. We are trading against the main momentum, against the main direction, which is obviously to the downside towards this draw on liquidity right here. But again, this doesn't mean that we are not going to take any trades against that. When we have some of these things aligning that we just talked about, this is when we can take advantage of the buy side of the curve right here as price is pushing towards the bearish higher time frame PD array. If lower time frames switch into sharp bullish order flow that we will talk about, this is when we can catch some scalp opportunities towards that bearish higher time frame PD array. And once price reaches into it, let's say this is where we have that bearish weekly or daily time frame fair value gap, this blue rectangle right here. When price reaches into it, we obviously don't know if it's going to go higher, if it's going to react and reverse into sell side of the curve right away. So when price reaches that, we simply go to the sign lines, not looking for any longs from that point, simply waiting to see what price is going to do. And if it does switch into bearish delivery, it switches into sell side of the curve trading towards the original consolidation. We are again talking about this area right here. This is when we can look for a bigger day trades right now. Trading with the main direction, with the higher time frame momentum towards the bigger higher time frame joint liquidity. In that case, we traded both sides, buy side of the curve of this sell model and sell side of the curve of this market maker sell model. All right, so now right here on the left, we have this weekly time frame delivery. Let's imagine again that we are inside of this bearish trend. This pullback right here, that is happening on the weekly time frame. Here, let's imagine that it's taking place on the 4 hour or 1 hour. So this tiny pullback right here on the weekly time frame, on the 4 hour and 1 hour, in other words, on the lower time frames, will be a lot bigger structure. So this low that we are seeing here on the weekly time frame is the original consolidation that I'm talking about, a potential original consolidation of lower time frame market maker sell model that's most likely about to come. Of course, we don't know for sure, but this is how we come to conclusion that we are potentially trading a pullback towards a weekly, in other words, a higher time frame bearish PD rate. And how do we know that a sell model most likely is going to take place? Obviously, because we still didn't tag the main higher time frame draw liquidity, so we are still on the run right here. If this higher time frame draw liquidity and this main target would have been tied already, this is of course when these sell models and all of these pullbacks would lose its weight. Not completely, because obviously we don't know when the bottom is going to happen, but still, when we are trading towards a bigger, higher time frame drawn liquidity, this is when we expect for those sell models to take place. And for a sell model to happen, again, what we need is a buy side of the curve to happen first. If they have a weekly or let's say a daily time frame bearish order flow, that means that price is seeking and pulling back towards bearish PD race first before it starts a lower time frame sell side of the curve. For that to happen again, what we need is buy side of the curve. So when we see those signs appearing, when we see everything shaping up for us, this is when we can look for some short-term long opportunities, which usually again are quick in and out positions. So now one of the characteristics that you want to see from the lower time frames is price switching into sharp bullish delivery. And what I mean by that is that price is usually giving these tiny lower time frame, 15-minute time frame bear traps. It's running some sell side liquidity into bullish PD arrays, forming strong lows. Noted that price ran higher, then came back, ran this sell side liquidity right here, into bullish P array, and let's say it started pushing away higher. So now from this point, we look to the upside. Do we have some clear higher time frame P arrays that price most likely is going to reach for? If they do, that's absolutely great, especially if price already ran some lower time frame and daily time frame sell side liquidity pools on the way already, causing this bigger reaction to take place right here, or at least a pullback on a weekly or daily time frame. And then they have a very clear area. Let's say we even have some lower time frame low resistance liquidity around the low of this higher time frame bearish P array right here. This is when it's even better. And this simply becomes a key area that we will look to trade towards before moving on the sidelines when price reaches the low of it, and from there simply waiting to see if price is going to switch into sell side of the curve right here for us to be able to take shorts moving with the main direction what comes to the higher time frames, trading towards the bigger drawn liquidity right here. But now focusing on the buy side of the curve, when we have this reaction right here, and then price takes out this high, leaving first sharp low that ran sell side liquidity into bullish beta raise, that's usually looking again like some bear trap because price ran below. Some people start thinking that this is a shift in delivery to continue moving to the downside, but again, notice that price ran some sell side liquidity, let's say into bullish fair value gap here, and it reacts higher. From there, we simply stay patient, looking to see what happens next, and if price takes out this high right here and looking to the upside again, we have some low resistance, lower time frame buy side liquidity, we have higher time frame bearish PD ray hanging right above. This is when you can say that we are in a short-term bullish delivery right here, pushing towards the higher time frame PD ray. In other words, they are building buy side of the curve of a potential upcoming market maker sell model right here on the lower time frames. So when price starts pulling back again, leaving some smaller lows right here again, this is when we again expect for continuation to happen, because notice that before price started pulling back right here, before this pullback took place, notice that this high formed right below, not running the buy side liquidity, right below the higher time frame pizza ring, meaning that this high holds liquidity because price failed to do its job. And unless we have some major SNT going on between these structures, we will most likely will see another continuation, taking out low resistance buy side liquidity here, taking out this high, and of course running into the higher time frame bearish PD ring. So now when price runs sell side liquidity, and let's say again, they have bullish beta ray right below. This is again maybe what we want. Another bear trap looking type of formation. This is now when we want to capitalize on this move right here. So this tiny structure, which is forming now on the 4 hour or 1 hour, becomes a tiny market maker buy model fractal right here on execution timeframes and 15-minute time frame, because this whole development is again a 4 hour, 1 hour delivery. So if we would take this yellow box now and move it to the side, this is where we would have a complete market maker buy model on execution timeframes like 5 minutes, 2 minutes, even 15 minutes, if let's say if this whole structure is the 4 hour time frame structure. So this is where our long opportunities would be born right here. Trading towards this high, and of course trading towards the low of the higher time frame bearish PD ray that's acting as a key magnet right now, because we are expecting that price to complete the pullback before it continues dropping towards the main higher time frame draw liquidity right here with the main momentum and the main direction. So we talked about some key aspects right here, and this is how we trade and find opportunities in the buy side of the curve right here of a potential market maker sell model that continues moving with the main higher time frame direction. And this small pullback here, let's say on the weekly or daily time frame, on the 4 hour or 1 hour or even 15-minute, usually becomes a full sell model. We trade the buy side of the curve, being a lot quicker with our management, with our partials and stuff like that. And then after that, we move to the sidelines when the higher time frame bearish fair value gaps low is hit to see if price will switch to the sell side of the curve. And if it does, this is then they start looking for sell opportunities for bigger day trades, targeting, of course, the original consolidation, which would be right here. And of course, other higher time frame levels on the way towards the bigger drawing liquidity. So that's all for this one. I hope you learned a thing or two, and we will talk very soon. Take care, guys. Have a great day.